welcome to this breakfast session for WiredSussex members. I'm Reefa, Head of Events at WiredSussex, for those of you who haven't met me yet. And I want to thank you for coming, and thank you so much to our sponsors who are sponsoring a series of breakfast sessions throughout the year, plus accounting. So today's session is all around angel investment. So here to host this session is WiredSussex board member. He does a lot of other things as well, but he's Alex Cowell, and his guest is Kristina Pereckaite, and from Southeast Angels. And I'll hand over to Alex to make the introductions.
Thank you, Reefa, and thank you very much, everybody, for joining today for our first WiredSussex breakfast session of 2021. So as Reefa said, today we're going to talk about angel investment, specifically what it is, briefly, why you might want it, and tips on how you go about it. So we know it can be a bit of an alien world to people, even though it's, you know, a part of business and everyone's doing business, but there's lots of new terminology and things to think about, processes. So hopefully Kristina and I will break some of those barriers down and make it accessible for you today. So we've got 30 minutes. We'll start with a Q&A with Kristina and myself. And then, as Reefa said, please do give us lots of good questions, put them in the chat, raise your hand, and we'll come to you for a discussion. So a quick intro from me. I'm one of the non-exec directors at WiredSussex. I founded a digital agency based in Brighton in 2002, which was acquired by a global marketing agency in 2013. And since then, I've been active angel investor, and I'm also a non-exec director for a number of startups, helping them to get investment. So that's me. Kristina, would you like to introduce yourself?
Yeah, sure. Good morning, everyone. Great to be here. So I'm Kristina, Director of Southeast Angels, as I've been introduced. Southeast Angels is a Brighton angel investor group supporting early stage companies to raise funding, whilst also providing a valuable community for local investors. I'm also the Entrepreneurship Director at Platform 9. And overall, I'm personally on a mission to create a hub for serious investment locally, to have these serious investment conversations, as many of you might agree that there's always been a gap for this in the local area. That's me.
Thank you. So I thought it'd be good to just start. I can think I can see most people in small tiles on my screen, but it'd be good to just find out, maybe just a raise of hand if your camera's on, or to put it in the chat. How many people are thinking investment of any kind really might be right for their business? Raise your hand if, okay. Couple, yeah, okay, a handful, great. And is anybody on the other side of things possibly looking to get into angel investment and wanting to find more about it and possibly investing in businesses? Okay, great. So a bit of a spread there. Thank you for those. Kristina, then, let's start briefly by just explaining what we mean by angel investment.
Sure. So I guess, like you said earlier, it can be a whole other world, right? So if you haven't really experienced it before, it can seem hugely complicated, but it's actually pretty straightforward. So angel investment tends to be a source of funding for very early stage companies. The key word in there is early stage startups rather than companies, right? So say you're starting a regular business like a flower shop or a car garage, then you might save up some money and maybe get a bank loan. But if you were starting a company that was completely brand new in terms of what you're creating, if it's something quite disruptive and new and hasn't really been done before, it's not your traditional business model, you're probably going to struggle to get a bank loan because it hasn't really been done before, so it's quite risky. So that's where angel investors tend to step in. And an angel investor is essentially a high net worth individual who puts up money into a startup company that is quite a risky investment for them. And in return, they get equity in the company in the hopes that that company then goes on and becomes really successful. As you can imagine, if you're doing something risky like that, you want to spread your investments across a bunch of companies. So there might be some people who invested in one company, but normally angel investors invest in a portfolio of companies to spread their risk. In the kind of knowing farewell that, you know, a majority of those might not return any money at all. And so a really big factor of why an angel investor might invest in a company will be around how much they can potentially return. And yeah, I guess like that's the basics of what it is. And an angel investor can be pretty much anybody who's got some money set aside that they can invest in, they can put into risky investments. It could be somebody that was previously a founder and they've exited their company, and so they run into some money, and now because they get the whole startup scene, they want to invest that money in startups rather than, I don't know, property or funds. Or it might just be maybe your friend or family member becomes an angel investor because they want to invest in your company and then they get into it. So pretty much anybody could be an angel investor as long as they have some money that they've set aside to invest in something risky. Does that
great.
kind of cover the basics?
And I think just to add to that, often you will hear about a friends and family round coming first. So when it's an idea and it's at the riskiest stage of not even getting off the ground, then people often have a friends and family round before they are introduced to angel investors who they might not have known before, where it's the sort of the next stage along the journey. And Kristina, what would you say investors look for? What makes a business investable? Because obviously not every business is.
So first and foremost, you've got to be addressing a real market need, so that you've got to be solving a really clear problem. There's loads of great ideas out there, but not all of them are addressing something really important that, is scalable. So you might have come up with a really cool idea for, I don't know, a stock subscription business, which is actually quite a successful business. There's a couple of those, but say that's not really addressing a huge market need, and so it might be a little bit less investable, considering it might not be for a big market or addressing a real problem that will get to people. You want to be slightly later than idea stage, right? So we're talking about early stage investment, but you have to be past idea stage. If you're at the point where you're like, oh, I've got an idea for something, that's where friends and family might come in. If you've got that luxury, of course, or I don't know, it might be borrowing some money or it might be grants. But once you've got past that stage of, right, I've proved what I'm trying to create, and I've tested it out, right? I've done some surveys, I've spoken to loads of customers, I've actually maybe sold something, then, once you've got past that stage, then you're investable to an angel investor. I also talked earlier about this. You need to have scalability in the sense that you can return something quite big for an investor potentially, right? So you have to have the capability within the growth of your company to return at least 10 times the return within 5 to 10 years time, say. So if you're setting up a company that you can see, right, it can grow really big, but actually it's only going to grow maybe say 3 times the size, and then it's going to stop because of the nature of the business, then it might not really be for an angel investor. And something to think about is if you are in those early stages where you've just got proof of concept, realistically, the investor's looking at you as the investment rather than the company, right? So to be investable, they're really looking at the people behind it. Why are you the right person for the job? Do you have a well-balanced team? So do you have the right people around you? If it's just you with an idea, is that really, would you put your money behind somebody that didn't have that kind of well-balanced team around them? And the final thing I'd note on the investability side of things is really important, which is barriers to entry. So how are you making it difficult for other people to just go and do the same thing as you, and therefore limit the growth of your company?
Yeah, great. I think, just to add to that, your point about delivering a return, I think it's always worth thinking about when you go into conversations with investors, what your possible exits might be. Investors very much, as Kristina said, they appreciate that they're investing their money for a reasonably long period, 5 to 10 years, often towards the back end of that. And they're not expecting any money along the journey, but they do want to know that you've got a thought about how they're going to get the money out at the other end. Otherwise, it appears very risky.
And just actually, Alex, just on that point as well, thinking about it the other way around, are you sure you want to get investment as well, right? So you're investable if it's right for you, because around the whole exit strategy side, and if somebody takes equity in your business, you instantly have a different kind of layer to the decisions you're making in the company, because you're working towards an exit. You're working towards making a return for investors. So it's worth thinking about whether that's the way that you want to go as well.
Absolutely. And just to extend that point, in your experience, Kristina, how involved or hands-off might investors be along that journey?
So angel investors tend to be more involved than other types of funding, I guess, and that's kind of where the term angel comes from. You know, a way for them to remove a little bit of the risk is to actually support the company, right? So and they tend to invest in companies that they might have a background in, and they can actually help the growth of that company. So they might open doors for them. They might actually support with certain parts of the strategy. I mean, there are angels who won't get involved at all, and it will just be money, but the usual kind of tendency of angel investors is to support in some way. And that's usually kind of agreed in advance.
Absolutely. I often hear of the phrase smart money used to describe, you know, the right angel investor in your business, because what you often get for someone who's put the money in is great free advice. Because obviously by giving you advice and supporting you along the journey, they are nurturing their investment as well. So if you're prepared to give away the equity, then, you know, it can be a great thing for the growth of your business. Let's move on to the journey then of, right, let's say you think investment's right for your business. What are, Kristina, what do you need to think about, and what are the steps? I know that's a big question. We might break that down.
I mean, yeah, there's a couple of different elements, but I think the first and foremost thing is to be able to really clearly explain your business. I think that almost precedes anything else, right? So can you explain your business in 60 seconds? You know, it's a good test. Be like, can people really grasp what you're doing? Can you explain it clearly? So that's the most important thing. Just get your elevator pitch ready, right? And then if you're starting to approach investors, you want to have a pitch deck. So just covering the key points of the problem you're solving, what your product is like, what traction you've had so far, the market need. And you also want to be prepared to showcase business plans, you know, your forecasts, your financials. Ultimately, you want to showcase that you have really thought this through and you are prepared for, you know, any situation, because of course an investor's going to look for that. You might also want to have a look into getting advance assurance for tax relief. So, you know, the terms SEIS and EIS might ring a bell for some of you, because that's a huge reason why investors invest, is to get tax relief. It's a really great government scheme that we've got in place in the UK. So you want to have a look at getting advance assurance through HMRC. And actually, this isn't maybe like a set thing, but I think it's really important, which is to have just make sure you're going in it with the right mindset. It's going to be really, really tough. It's going to be a full-time job. You're going to be knocked down a lot, but it's just because, especially with angel investors, they're investing things they're personally interested in. So it's not just a case of you get a no because it's not a good business or it's not investable, but you're going to get no's just because people don't like it. And so you just really got to go in with the right mindset into it. I think those are the key kind of initial things.
Yeah, great. Let's talk more about the pitch deck. It's obviously a very important part of that. I tend to find that most people will distribute their pitch deck first without detailed financials, and then if they can start to reel in an investor who's a warm lead, then you start getting into the more detailed conversations about numbers. Obviously, that pitch deck is an extremely important sort of bit of collateral along that journey. If someone's never produced one before, Kristina, how would they start thinking about what goes in there?
Well, there tends to be a set structure that most people follow, right? But it's once you look at that, you realize that it just makes sense. These are all the things that an investor would want to know. So you've got to be able to just tell the story of your business really clearly, but also get people really excited about this big mission that you're on, right? So you want to cover your elevator pitch, the problem you're solving, what your product is, the market size, how you're going to enter the market. You want to cover details about your team, right? We said earlier about how important the team is. You want to showcase who your team is, who your advisors are, all that kind of stuff. And you also need to obviously ask for investment within that pitch deck. So you need to get really clear on how much you're asking for, how much equity you're giving away, and what your valuation is. Just recently posted a resource on pitch deck structure on our website, so you can have a look at that if that's helpful.
Okay, great. I think ambition's a really important thing in that, actually, just to elaborate on that. I heard a VC talk recently, and he was saying when he reviews a pitch deck, the only thing he wants to hear about in the present is when you said how much money you're raising, what you actually want to do with that money. And you obviously have to explain how you might spend the large amount of money you're about to receive. But everything else should be looking to the future. So, as you know, going back to the point about investors want at least 10 times return. If they're going to get minimum 10 times return, they need to be thinking, could this potentially, if I'm in as one of the first investors, deliver 100 times? You know, if it's a VC, could this deliver the entire what my portfolio's got to deliver in one investment? So you really need to excite. And I think another important point about that pitch deck is it needs to be understood by people when you're not presenting it. So it's not like a normal presentation that you're standing up in front of and it's just supporting what you're saying. This needs to be really clear in 15 to 20 slides exactly what your proposition is. Because what you really want is if it goes to an investor and it's maybe not quite right for them, if they then send it to their friend who is more in their sweet spot, you want them to send that. You know, okay, it's a fairly confidential document, but I wouldn't worry too much about that. Just got to accept it's going to be forwarded around to people who might get excited. So that person who's never even heard of you until that point, and you haven't been in touch with them, it's just been forwarded by someone else, you need your story to be completely understood by that person and hopefully get them excited. And how would you go about finding the right investors?
This is a tough bit, isn't it? This is the tough bit. So I feel like, I mean, I've helped a lot of businesses to find investors, but at the same time, when setting up Southeast Angels, I kind of had to go on that journey on my own to obviously get the group together. And I guess I can provide you advice based on how I found my investors, because it's unique for everybody in their business. I think number one is really know who you're looking for. Like I said earlier, you don't really, anybody could be an angel investor, and actually maybe somebody who is in your industry that's just sold a business, maybe they're not listed as an investor. Actually, a lot of people aren't, but they might be somebody that might invest. So really know who you're looking for so you can find them, and treat them as a customer, right? This is your most important customer. You're selling, this is your biggest sale, the most important sale that you're going to make. So go through the same journey as you would with finding a customer. Just kind of simplify it in that way really can help sometimes. And the best way probably to start is just to talk to everybody that you know about what you're doing. Don't be protective about it. I know sometimes people don't want to give away their ideas and secrets, but actually, if you don't have an existing investor network, you just need to go out there and just generate as much conversation as you can about what you're doing. So you talk to one person, they might not be an investor, but they might tell somebody else and somebody else. So you want to have your elevator pitch, really just like it's brilliant, right? Everyone's really excited about it. They remember the key points from it, and just network like mad. Online research, if you know exactly who your investor is that you're looking for, just, search them out. It is a full-time job. Like I said earlier, it takes a lot of time. And that's why things like angel groups and funds exist. They already collate all of this for you. So, going straight to angel groups, you can obviously come to Southeast Angels. But you really want to speak to as many people as possible, because you need to create that kind of fear of missing out for investors. If you're just talking to one investor or one group, it's going to take you a long time to close that round, unless it's, just a perfect fit, really. So you want to talk to just as many people as you can. I'd recommend going on to the UK Business Angel Association, so you can just search out anybody that's listed on the directories. Just a lot of hard graft.
Yeah, exactly. And I think just to add to your point about not wanting to get too much confidential information out there, I just remember that it's very easy to have an idea, and actually execution is the hard bit. So just by giving someone your idea, there's a very long way to go for someone to copy you. So I wouldn't worry too much about that. Much better to be talking to people, and also just remember to be in listening mode. You will need thick skin during this process. You need to get used to the word no. And that's why you need to talk to a lot of people. It is a bit of a numbers game, and obviously you can get lucky, and at the end of the day you only need one investor to say they'll write you the whole check, and you can be on your journey. But normally you'd need a number of angels to complete your round. With let's say you're raising 200k, you might have a minimum investment of 20, 25k. So you might get some bigger ones, but you might have, 4 to 8 angels in that round. So you're going to need to talk to a lot of people to complete your round. Just a question about angel networks and Southeast Angels. Can you just tell us, Kristina, how angel networks differ from, say, approaching an individual investor? What does it look like to engage you? And maybe just a bit more for everyone locally. What's the remit of Southeast Angels?
I guess with angel networks, it's a more formalized process, right? So rather than reaching out to one person, having that conversation, an angel network will tend to have a formalized process of you complete a form, you'll maybe present to somebody in the group, and then if there is interest, if it's a good fit to the members in that specific group, then you will go to a pitch session, and then you'll pitch to the investors in the group. And the difference there is that, and the whole reason that investors join angel groups is that rather than trying to have to make a decision on their own about, like, should I invest in this company? How much risk is this? Like, who else is going to be investing in this? They can sit around a table of other investors who are all, local to them, and can have a really informed conversation and say, right, I'm going to invest in you. Like, how much are you going to put in? Should we all put in a little bit together? And everybody has a very different background most of the time in angel groups. So they can all provide a different perspective. Like, if I go in on this, I can help them with their marketing, or if I go in on this, I can open a door for them there. So that's kind of the added benefit that you get with groups. And with Southeast Angels, because we're quite new, we launched in November last year. We're pretty open at the moment in terms of the criteria of like sectors or industries. But obviously the usual criteria stands around, you have to be past minimum viable product stage. You have to have proven and done something. It can't be idea stage. We are particularly interested in anything to do with social impact, sustainability, and any underrepresented founders, because I can tell you from 100 applications, we'll have like 7 women apply for funding. So always make that a priority. And yeah, so other than that, it's pretty open unless I'm missing something. Obviously, tax relief is a huge benefit. Well, it's almost a must really for the investors to be interested.
Okay, thanks. We've got a good question from Matt Spall. Thank you, Matt. The question is there a target amount that an angel will typically invest? There's a few ways of answering this. I think an investor will normally have an amount they want to invest per year, or they might have a finite pot that they're going to invest when they find the right opportunities. I think to turn that on its head and say, from a business perspective, how much do you want an angel to invest? You normally do set a minimum investment amount. So going back to my earlier example, if your round was say 200,000, you don't want too many investors. What's called your cap table, which is just a list of all your shareholders once all your investments completed. You don't want this ideally to get too messy, because it can make future rounds complicated and just make your kind of your admin a bit of a nightmare. So you would normally set a minimum investment. So you might set that somewhere between 10 and 20,000. So and then you get investors who are relatively serious. So yeah, I think investors, if you get it, I know an investor who invested in the business recently. There was a round for over £500,000, and then he needed 2 investors. So there's some big scale investors there. But there's also, successful entrepreneurs who might still just want to do a £20,000 investment, not a £100,000 investment. But it just depends really on whether you're in their sweet spot, whether they really understand your sector and think they can add a lot of value and think it's the next big thing, or they're following one of their friends and it's not really their sweet spot. So yeah, it's kind of hard. You need to look at the investor on an individual basis, but I'd certainly set a minimum investment amount as the business. Kristina, anything to add to that?
No, I think that's spot on. It's just, how much they have to invest and how interested they are. And it's like, if you put yourself in the investor's shoes, and you've got 100K to invest and you find one company, how much would you put in there will depend on obviously how much your whole pool of money is and how much you want to bet on that business, right? So it's pretty varied.
Perfect. Okay, another question from Kate Grundy. Thank you, Kate. I'm currently setting up as a limited company. However, being a community interest company, is that what it's called? Seems to help with getting grants. would being a CIC put investors off? Christina, are you?
I think it depends on whether you are still able to get advance insurance on EIS and stuff. But there is another, there is something for social enterprises that provides tax relief, and I've just forgotten the name of it. I think it's a SITR, tax relief for social enterprises. So I'd have a look into that. But the way you got to look at it is, if you are a CIC or a charity, again, check on the tax relief side of things, but it's all about whether you can create a return on investment, right? So, I mean, I'm not an expert in CICs, but I believe your ultimate goal is not to create profit, but to invest everything back in. So if that's right, maybe not. But there are a lot of impact investors out there that invest for not just purely return reasons. So you'd be dealing with a different group of people, I think. But there's also, you can look into some tax reliefs specifically for social enterprises.
Okay, great. We've got a couple of minutes left. I just want to ask a question, Christina, about the other end, the investor's end. Mm-hmm. So someone was looking to get into angel investing, even with Southeast Angels. Like, what would be your tips?
Where to start? I guess, we've had a couple of people that are completely new to investing who have joined the group and have just kind of started getting into it. And I think actually the best way to get started is just to talk to other angels, because you only really get a feel for what you really want to invest in and what kind of investor you want to be once you've been around that. So I would say just like start mentoring companies, start speaking to startups, get a feel for it if you don't already work with startups. And it's a good way to not put the pressure on yourself as, I'm an investor, and people start approaching you. You can just start mentoring companies and get into it from that startup side. But I would highly recommend just starting to connect with other investors and say, if you're not in an angel group, you could just organize a conversation with somebody just to talk about how they invest. And eventually what you want to do is, once you've just been through all that experience, you start to create an investment thesis around, this is what I invest in, this is what I don't invest in. Just like with any investment, there's so much that you can invest in, and it's just about really creating what your thing is and what's really important to you. Because there's a lot of opportunity out there. So having as much experience and guidelines for yourself, but also other people around you to discuss it through.
Great. Quick couple of last questions. So Simon Brand, thank you, Simon. There's presumably some legal cost to bringing in investors, and the startup needs to pay that. Any sense of that cost and complexity? I've also seen James's recommendation around seed legals, who are a good option for getting those early stage documents prepared. So the key things you're going to need are heads of terms early on, which seed legals can help with, and ultimately your shareholders agreement, which just outlines how everything's going to be working. Another tick for seed legals. I think Tris Moore is on the call as well. So there may be local law firms that can also help you with that stuff. And then one final question from Phil then. We've got, we're in the last minute now. What's the best way to engage with Southeast Angels, either as entrepreneur with an idea or an angel? Christina, how do we use you?
So best way is just go on our website. There's a really easy way to contact us as a member or as a company. And you've got the benefit of the fact that we're still an early company. So we don't have, we do have a lot of people reaching out to us for investment, but we are, still early days. So we can have a proper conversation one-to-one rather than just sending cold emails to people. So feel free to just reach out to us. And we've got quite a few resources there around all the questions around investment as well. So you can have a look at those.
Brilliant. Thank you very much, Christina. That's brilliant. And thank you everyone for your questions. I hope you found that a really useful session. And back to you, Rifa.
Thank you so much, Alex and Christina. It feels like we were just getting started, just getting warmed up with that. We'll probably have to do another session. I hope people will be up for another session similar to this, but going a bit deeper into further questions and opening up a bit more to more people who are definitely going to be interested. People are saying, thanks very much, guys. Brilliant session, really interesting, informative, superb. Thank you, says Matt. Great. So thank you so much for everybody who came today. And thank you so much to Plus Accounting for sponsoring these breakfast sessions.